Let me introduce you to Stephen Dunne. Stephen is the chair of the investor group Climate Change and also on the investment committee for Superannuation Fund Cbus. Stephen, you weren't always a climate-focused investor, and I'm just wondering, first of all, how did you find yourself in this space?
Yeah, no, I think that I found myself in this space primarily because of the risk that the climate poses to investors worldwide. From my perspective, and the more I've read and sort of researched about it, climate change represents a systemic risk of enormous proportions for investors, particularly long-term investors. And as chair of Cbus, we invest money on behalf of workers in Australia, particularly people working in the construction industry, and they're going to, on average, they're going to retire in about 30 years' time. So the average age of the fund is around sort of that mid-30s. So in about 30 years' time, around 2050, most of them are going to be retiring. And essentially, they're charging us with the responsibility of investing successfully for them over the next 30 years. And as I look forward, climate change represents the most systemic and most significant investment risk that we need to deal with.
So you really see it through the lens of risk. And do you think, which came first? Was it people like you who started to realise that there was a risk in an investment sense, or was it coming from consumers who were worried about climate?
I think it's sort of, it's easy to say a bit of both, but I do think investors, I won't say are late to the party. A number of investors have been sort of thinking about this for quite some time. But generally investors are held accountable over a very short period of time. But pension funds and pension fund investors such as ourselves must take that longer term view. So I think that from a perspective of really sort of trying to deeply understand what climate risk is and what does it mean to investment portfolios, I think investors have spent a lot of time thinking about it. Consumers and the investing public in terms of the superannuation members are concerned about it, but as you know, it's a very complex set of scenarios that can play out in terms of climate change, and therefore trying to sort of process that as a lay investor is quite difficult. So they're really saying to their board of trustees, you guys need to get onto this and successfully navigate as best you can this systemic risk.
Yeah. When did you see that shift? Can you put your finger on when consumers started to be more aware they had a bit more power with their wallet, particularly for their own, the realisation of potentially whether they were going to have any retirement funds or not, based on where their money was being invested?
Yeah, look, I think it's probably only been, I would say, I won't say en masse, but sort of a significant number of the members. Essentially, it's probably only been in the last 5 years that this really has gained momentum. And I think that that's partly because, essentially, there's more discussion in the media about it. So people are worried about it. They don't really know what to do about it or how to sort of tackle it from an investment perspective. But certainly that, in the engagements that we have with our members and the surveys and the focus groups we do with them, it is one of the key expectations that they have of us to invest their money successfully, and therefore, tackle this issue of climate.
Yeah.
They're really not quite sure about it, but they realise that it could be a significant risk to their future retirement savings and the world that they're going to retire in. And so they're asking us to make sure that we're on it.
Do you think, I just wonder as I watch it unfold, whether the more, it's one of those chicken and egg things, isn't it? The more aware consumers are of their ability to vote with their wallet, the more traction you know, groups like the Investor Group on climate change. So how much, I mean, they've got several $1 trillion, really, haven't they, under management? Well, they represent several $1 trillion. So the more it kind of allows them, well, people are more likely to listen, which then creates more awareness, which then has this kind of tumbleweed effect, I think. Do you see that?
Oh, yeah, you're absolutely right. I mean, the aspect around sort of for a individual investor, individual shareholder in, for instance, BHP or in you know, Rio or any of those has very little sort of you know, influence. However, as a collective, then we have significant power. And I think that one of the initiatives under the IGCC banner is you know, the Climate 100 initiative, which is really targeting the top 100 companies globally in terms of top 100 emitters on the listed stage, and engaging with them both you know, from the collective superannuation funds here in Australia and fund managers, but also globally. And by actually, you know, coming to the table, you're speaking on for a significant part of their shareholder base, and so management must listen. And we've seen sort of, you know, BHP, for instance, you know, actually sort of, you know, change the way that they actually go about, you know, their membership with advocacy groups who advocate, like the Minerals Council, on their behalf. And ensuring that there is an alignment between what they say to us investors and also the membership that they're, or the advocacy groups that they're part of. And that's been a really quite important thing. But that only occurs when, for want of a better term, we gang up on them and get change, which we can do, as opposed to, I'm not saying that, you know, individuals, you know, actions are irrelevant if they're just not as powerful. Unless we can actually, you know, pool our resources together, which is what happens under IGCC and our sort of related groups across the globe.
Yeah, it's certainly changed everything, really, in terms of being able to shift the dial.
Yeah, barring sort of up until recently, most investors were saying it's the government that needs to fix this. The government needs to put a carbon pricing system in, you know, create sort of an investable universe that you know, would actually encourage investment into those particular, you know, spaces. And basically, over the last decade and a bit, the government's done bugger all, and if anything, it's probably done quite a bit of damage. So from IGCC's perspective, what we are collectively pushing now is sort of going, well, you know, we can't wait for government, and quite frankly, this risk is very significant. You know, obviously mitigation is the least cost way forward, because, you know, in some cases trying to build resilience in a 4+ degree world is like, well, get it. Yeah. So from the perspective of saying, well, let's just we need to get our portfolios into shape, and we need to engage with the investees or investee companies that are aligned with what we believe is really important. And what we believe is really important is, you know, what's the globe's pretty much agreed to, which is the Paris targets. Yeah. 45% reduction, 100% reduction by 2050. So what we're doing now is actually asking and encouraging all the super funds to sign up to net zero by 2050, and preferably 45% reduction by 2030.
Yeah, sure.
So what happens is, if you've got sort of then, you know, the Australian superannuation market, and if I just deal with Australia as a little bit of a microcosm, saying, all right, well, all of us are saying we need to reduce our carbon footprint by 2030. Yep, for the portfolio. So of the $2.1 trillion that are in super. Now we only represent probably half that, so call it 1 and a bit trillion.
Yeah.
if we say, right, well, we've got to do this, so we then, the engagement with the companies becomes, far more aligned, because previously we used to go to the company and go, BHP, we'd like to know how you've thought about carbon risk. What scenarios have you developed?
Or are you talking about IGCC or a single fund?
It's basically IGCC is sort of the mouthpiece, and there's more groups that sort of get involved in this than you can plug a stick at. We've got Climate Action 100.
Yeah.
UNEP. We've got the United Nations Principles for Responsible Investment organisation. There is another group. You've got Climate Works. You've got everyone, which is fine. But sometimes you think, the idea is that if we're going to encourage all super funds to have Paris-aligned targets for their carbon emissions for their portfolios, which is quite a change in thinking, which is, what we used to go along to is tell the company, you need to sort of, tell us so we can assess and analyze your carbon risk.
Yeah.
And the companies go, yeah, all right, here's a whole lot of shit.
No way.
No way.
Yeah. And
we'd go and get all this stuff and go, well, that was interesting. Whereas now you're turning up and saying, well, we've got a target to get to 2030 and have to reduce our carbon emission by 45%. You can only stay in our portfolio if you're on the same pathway.
It's a very different message, isn't it?
It is. It's like, well, oh, right. Okay. So it's not like you just send me a lot of information and I will analyze it.
Now it's take it or leave it, basically.
That's very interesting. You're saying you're only going to stay in the portfolio if, in fact, you're on the pathway with us.
Yeah.
And so they're going, right, okay, so you guys are serious about this. And we're going, absolutely. So there's a couple of funds that have done it. Cbus has done it. Hest has done it. Where Super's done it. So that's, I don't know, that's sort of, if I can get the 10 big funds, rest, then that's almost $1 trillion in those 10 funds. They can go, right, okay. And then it's just about coordinating us and et cetera. But all of a sudden, you've got investors talking the same language, the same goals as what's required from corporations.
So can I just check in just for clarity? So the funds, the IGCC really can only position. Is that basically what you're saying? So they're essentially positioning for their members, but the members themselves are the ones obviously having a direct conversation with investors,
yes,
with businesses. So it's slightly different teeth, isn't it?
So IGCC is sort of an advocacy group.
Really?
And essentially, it started off, originally sort of as a bit of an information sharing group saying, well, let's understand this climate risk, et cetera. And it's been going on for sort of, 15 years type thing.
Right.
And it's only been recently that from my perspective, I said, we're going to move away from being a facilitator of information and a supporter of ideas to someone who says, this is what needs to happen. If you want to be a member of IGCC, you need to sign up to this charter to say, we're going to have Paris-aligned, targets. We're going to look at sort of the resilience of our portfolios. We're going to actively engage, etc. And we'll provide you with all the tools and all the frameworks, templates, etc. to do it. And we'll continue to advocate as a group with government and with particular companies or industry bodies as well. So you're not all sort of having to go and have 500 conversations. So in essence, it doesn't sort of sit there and say to BHP, we speak for $1 trillion. Because really, if the BHP told us to get stuff, and we said, and said, then what are you going to do? We're not going to sell. We haven't got the right to sell their stock. So you need to get back then to Cbus and go, well, they told us to get stuff, you know, and then we go, all right, we'll sell the stock. That's right. So it's still, it's a more of a classic sort of industry lobby group type thing.
Right.
But importantly, you know, you're amazed how powerful those groups are with regards to giving each other some Dutch courage.
Of course.
Once you've got one saying, yeah, okay, I'm going to set goals.
It's like the gang, isn't it? The gang.
That's right. It goes, oh, did they? Right. Yeah, well, Cbus did it. So, oh, okay. Are they in, are they? Or okay, well, we better have a look. All right. And then it just, you know, so you can get sort of quite good momentum by actually going, right. And look, the good thing about it is that because this is a systemic risk, you know, we're not sort of, you know, trying to say, oh, well, we're not going to share our information with you on how we're doing it because it's unique. It's like, actually, we really want you to sort of, you know, take everything we've learned about it and how we're sort of tackling it. And here it is, because quite frankly, if Cbus is anyone who does it, it's not going to matter. So unless unless all of us sort of do it, you know, we're not going to get the change that's required to mitigate the risk. You know what I mean? So if a $50 billion fund does something, it doesn't make a difference. But if $2 trillion goes, right, let's rock, then it starts to make, you know, it's the point around the sort of individual investor, $50 billion, you know, 2 trillion.
I think that's the point to me that really also then starts to really empower consumer voice, because I feel somehow, I don't know, maybe it's the fact that mum and dad are onto it. So now, you know, we feel like there's a, you know, there's momentum. Well, they see the power of it, if that makes sense, and their money suddenly means more.
Yeah.
Choices.
Well, you know, to putting it on the street, I'd like to think that, you know, the simple sort of thing is, you know, has your super fund committed to actually reducing its carbon footprint?
Yeah, just ask.
Just ask. Yeah. And if they go, well, we think about it, well, that's not good enough.
Yeah.
And ask the next question is, have they committed to the Paris Agreement to reduce, you know, carbon footprint by 45%? Yeah. And I think that if more members asked, the more we'd go, yeah, we sort of need to do this.
So what percentage wouldn't have?
Oh, well, there's only 3 funds
of the
out of.
Oh, okay, right.
Yeah, and you know, so, and even the top 10, you know, probably only represent, you know, 40%, well, even 35% of the industry, of the superannuation industry. So there's still a lot that, you know, are still thinking about it.
Yeah. Can I just on this conversation, my dog's going mental. Do you really think? Sorry, actually, no. So I want to ask what you think. It just strikes me that really things like the IGCC and decisions made by companies like Cbus actually have way more opportunity power than government has anyway, in a way, because of what they can influence. I mean, how could government really, apart from legislating, which is almost impossible, and anyway, you know, it depends who's in power, how could they even have ever done it?
Well, I mean, if government would have regulated sort of, you know, and put a price on carbon, then that I mean, they do a lot of other stuff in terms of regulation. I'm not saying they're not. I mean, they can be very, very powerful and very effective, but the two things that hold them back, one is, well, I think that the biggest thing that holds them back is the fact that they've got a fairly short-term horizon. 3 years, you know, is the world going to fall apart in 3 years in terms of climate? No.
Sure.
And even after, you know, the horrific bushfires we had, you know,
nothing.
We'll sign up to our target of 26% with carryover credits, which means we're going to reduce our carbon footprint by about 8. It's like, well, you know, it's the fact that they've got, you know, the tyranny of the investments of the election cycle means that there's not really a lot of point scoring Because even if they commit to it,
then yeah.
people are going to go, well, okay. And it's just been so divisive in Australia that, it just means that, there's been so much disinformation put out that people don't know what to think. And that goes back to my point around sort of why I think that, they want someone to do something about it. What they don't know, just do something about it. And that's why, green funds don't do very well, because it means I, as an individual, you say, I've got to choose this one. Is this the right one to choose?
Yeah.
Is this one, when it says it's a green fund, what does it mean? And am I going to get a lesser return from it?
Yeah, and there's so
the capital was,
there's so much marketing around that. I mean, fair, which is fair enough. I do think though, there seems to be a perfect storm though for the pension funds really, because the perfect storm being, the rising awareness, but with and that linked to long-term risk. I mean, realistically, there's no choice, is there? At the end of the day, it's a shit risk, excuse my French, and that's the end of it, really. Money talks.
Yes, and I think the pennies drop for most pension funds that, they've got to have a long-term investment horizon, and this is a very significant long-term risk, and it's a cumulative risk. It's not like something that will happen in 30 years' time. Things will just continue to get worse. And because it's cumulative in terms of the effect, it means that unless you can't sort of sort it in 20 years' time, you've got to, which is all the sort of curves that we need to follow. So unless you get onto it now, then could you be seen as being derelict in your fiduciary responsibility?
Well, what do you think?
Not sure, but Rest is being sued at the moment. So
yeah, I was just going to say. So Rest, as well as the Melbourne student who's suing Australian government.
Yes.
So that's a bond. That's a bond.
That's a bond. Yeah.
Yeah, and then the latest one with those teams, that's more about trying to stop a coal mine. Although that's duty of care. I know it's not investment, but it's another angle again.
Yeah. So I think it's. It certainly is gaining momentum, and I think that as the proof keeps coming through that the climate is changing, it is having a negative impact. Right. Okay. Well, how does a trustee say, this is not a risk that I need to take into account?
Yeah.
We expect every company to have it on their sort of, on their risk, list. So how can you, as an investor, not really say, well, this is a key core investment risk that I need to be thinking about, and how do I think about it, and how do I address it in my portfolio?
I think the risk case is going to drive that point down, isn't it, to director responsibilities for appropriate.
And look, at the moment, sorry, not at the moment, APRA and ASIC are both saying this is a really important systemic risk. You need to be on it. You need to work it out. So you've got the regulator now sort of, saying, well, but you need to sort this as well. So that's good. So there's a lot of pressure on investor groups to sort of get on with it. So like membership of IGCC has gone through the roof. We keep getting people sort of just lobbing in. Can we be members too? Because we say as long as you sort of commit to the goals that we're sort of setting up, so you're not just committing to sort of greenwash your
using us for a badge,
your credentials.
Have you tossed anyone out yet?
Not yet. And it's really only been since I've been on it for it's my second year. But it was what I said was, well, we're going to change from being a sort of a facilitating group to a leadership group, and we're going to sort of have here's the 4-5 key strategic goals that we have. People must sign up to them. We'll give them a bit of time to actually, have a climate change policy in place, have a climate change roadmap in place, but we're not going to give them forever. So if they keep answering no, then we will be booting them out. And the good thing, so Yeah, going around. I haven't booted anyone yet, but and ideally you don't have to boot anyone. Hopefully they'll all sort of step up and go, well, let's do this, but we'll wait and see.
You have to think with all of the, you know, I mean, all the risk calculations that get done, I can't, you know, so within the space, actuarial, you know, all of the risk assessment, I can't imagine anyone wouldn't, would they?
Well, yeah, funnily enough, it's quite a difficult, you know, if someone turns around to me and says, well, okay, well, tell me, what is it sort of, what's a 4-degree world mean by 2050 in terms of reduction in GDP, global GDP? Yeah, it's really hard to sort of give them a definitive example, because you've got the heating climate, you know, goes through and has sort of a variety of effects that we've talked about, but actually, okay, so those physical effects, how do those physical effects then affect the real economy, and how do those real economy effects then actually affect your investment markets, and then what are all the feedback loops that occur within all that?
It's a nightmare.
Well, that's right. And you look at it, and there's also, then you've got to take into account, well, what about the transition risk that, you know, government policies sort of come into play at different times to change, the trajectory.
Yeah,
so
right.
It's like this sort of massive
mess
that you sort of go, well, you sort of know it's not going to be good, because a drying, continent, more, I like more frequent droughts, heavier rainfall events, hotter sort of, longer prolonged heat waves. You sort of go, well, that's not going to be good.
No,
you sort of can't work out how anyway that's good. But the issue is then sort of, okay, but try to quantify it is very difficult. There's been some interesting work of central banks, which are around sort of greening the financial system, put out sort of a number of papers with regards to the scenario analysis. Because it's quite hard for companies to sort of go, well, all right.
It is interesting, isn't it?
How do I work out sort of what price do I put on carbon? Because there is no price. Well, and is the price going to go to $100, or is it going to go from, it's currently sort of a 10 globally, thereabouts. Is it going to go to 100, 200? What are the physical impacts that are going to have? It is quite interesting, because it's, I know QIC's done quite a lot of work around sort of, a shopping centre up in Toowoomba, and, right, so, the potential of another flash flood that sort of, takes out the shopping centre.
Yeah.
But the aspect around sort of a lot of the work you sort of do is, well, but is that the real physical risk? What if, in 20 or 30 years' time, the constant sort of, or more frequent droughts, etc. What does that mean for Toowoomba in terms of its population? Does it shrink? And therefore, that's a bigger impact upon sort of, okay, we've built culverts and things like that that actually, mean that we'll survive the flood when it comes again. But what if there's no one shopping? So they're the sort of things that are quite hard to sort of, work through. Yeah. And that's partly why, investors sit there and go, oh, this is all too hard. Let me get back to sort of just looking at their financial statements and seeing whether they're going to make a buck this quarter.
It was a lot easier once, wasn't it? Stephen, we could talk all day. There's so much to cover, but unfortunately, I need to move on. Thank you so much for your time today. Hopefully, we'll catch up again soon. Thank you so much.
Thanks,
Thank you.